Assalamualaikum warahmatullahi wabarakatuh. Let's begin the session by reciting Kitab Al-Fatiha. Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alamin. Ar-Rahmanir-Rahim. Maliki yawmiddin. Iyaka na'budu wa iyaka nasta'in. Ihdinas siratal mustaqim. Siratal ladzina an'amta 'alaihim ghairil maghdubi 'alaihim waladdallin. Amin. Okay, I have posted this PowerPoint presentation in the Google Classroom, and I would like to explain the question and the solution to this question. The question is taken from Financial Accounting for Non-Accounting Students 6th edition, and this question is question 3 from page 71. This for ACC 106 course. Okay, before that, I will use the accounting equation in order to record the transaction into the ledgers, close off the accounts and prepare the trial balance. Okay, the basic equation is expenses plus asset equivalent to capital plus liability plus revenues. Okay, increase in assets and expenses we will debit. Debit means we record it on the left hand side of the account. For capital, liability and revenues, if it is increased, then we will credit. We will record it on the right hand side of the accounts. If expenses and asset decrease, we will credit. We record it on the right hand side of the account. If capital, liabilities and revenues decrease, we will debit. Means we will record it on the left hand side of the accounts. Okay, the transaction is for the month of November. From 1st November until 30th November, you are required to record the above transaction in the relevant accounts, balance of the accounts and prepare trial balance. Okay, we started with the first transaction. Started business with 6,000 ringgit in the bank. So the effect will be increase in capital and increase in asset. In this case, the asset is bank. Increase in asset, we will debit. Increase in capital, we will credit. Okay, so debit asset, debit bank, credit capital. Debit bank 1st November, debit bank, the particulars will be capital, and then we will credit capital. 1st November, credit capital, debit bank. Okay. Okay, the second transaction, bought goods. Bought goods is bought purchase inventory. Purchase inventory means that increase in expenses. Increase in expenses or purchases. Bought goods on credit from AB Berhad and XY Trading. Okay, means that increase in liability. Okay, in this case is accounts payable. For account payable, we will record it in the name of the business because it is personal account. Okay, so debit purchases 2nd November, and there are two transactions. Debit purchases 390 for AB Berhad and 710 for XY Trading. Then we will credit AB Berhad and XY Trading. Okay, so account payable AB Berhad purchases, and then XY Trading. This one AB Berhad, this one is XY Trading, 2nd of November, 710 ringgit. Debit purchases, credit account payable. Okay, debit purchases, credit account payable, this one. Okay, the third transaction, made cash sales 240 ringgit. Okay, so sales and cash, increase in asset or cash, increase in revenue or sales. Increase in asset, debit asset. Increase in revenue, credit revenue. Okay, debit asset on the 5th of November, debit cash, credit sales. Credit sales, the 5th of November, credit sales. Okay, debit cash, credit sales. Okay, on the 7th of November, paid rent by check. Paid rent by check, increase in expenses, which is rent, and we paid by check, so asset will decrease. Asset will decrease. Asset here is bank. Okay, debit rent, credit bank. Debit rent, credit bank. Okay, so credit bank, this one, 7th of November, rent. Credit bank, debit. Oops, just miss it. Okay, here, down here. Okay, sorry for that. Debit rent, credit bank. Okay, on the 9th of November, paid sundry expenses. Okay, this one clearly this expenses paid by check again. Increase in expenses, which is sundry expenses. By check again, decrease in asset or bank. Okay, so credit bank, debit sundry expenses. Credit bank on 9th of November, credit bank, debit sundry expenses. Okay, credit bank, debit sundry expenses. Okay, next, sold goods on credit to Muthu and Sami. Sold goods is sales, increase in revenue. Increase revenue on credit, sold on credit to Muthu and Sami. Again, this one is personal account. Increase in revenue and increase in asset. Asset here is account receivable. Account receivable. Okay, so debit account receivable, debit Muthu and debit Sami. Credit sales. Debit Muthu and Sami, credit sales. Okay, debit Muthu, debit Sami, credit sales. Muthu and Sami. Okay, debit and credit. Paid wages amounting to 45 ringgit by cash. Again, increase in expenses. In this case is wages. and decrease in asset. In this case is cash. Okay, so debit wages, credit cash. Debit wages, credit cash. Okay, this one some mistake happened here. It should be here not cash but wages. Okay, credit cash, particular details is wages, and debit wages account. Debit wages account 45 ringgit. Okay, please make some correction in the cash account on the 16th of November. It should be wages, not cash. Okay, on 18th of November, return goods to. Return goods to means that this one is we return back the goods to supplier. Supplier here is account payable, AB Berhad and XY Trading. So the effect will be first on 2nd of November we purchase goods, increase in expenses, increase in liability. When we return back the goods, the transaction will be reverse. Okay, so decrease in expenses and decrease in liability. Okay, decrease in expenses, here is return outward. Liability here is the accounts payable itself. Okay, so we will record liability decrease, we debit liability. Okay, we will debit liability. Debit AB Berhad, debit XY Trading, credit return outwards. Okay, good return to the supplier. Okay, the next transaction, good return by Muthu. Good return by means that return by the customer. Okay, so previously we sold goods to Muthu and Sami, increase in revenue and increase in asset. When the goods returned by customer, the revenue will decrease. And asset will decrease. Asset decrease, credit asset, credit Muthu and Sami, debit revenue, debit return inwards. Okay, debit return inwards, credit Muthu and Sami. Okay, we look at Muthu and Sami, the account receivable decrease, credit Muthu 10 ringgit, credit Sami 50 ringgit. Debit return inward. Okay, next, bought delivery van on credit. Okay, this one is increase in asset, delivery van. On credit, increase liability, increase in account payable. Okay, debit delivery van, credit Tanjung Motor. Here, debit delivery van 8,000 ringgit, credit Tanjung Motor. Okay, the last one. Here, credit Tanjung Motor. Okay, I put here motor van, or it should be delivery van. Sorry for that. Delivery van. Okay. Paid AB Berhad 250 and XY Trading 400 ringgit by check. So here liability will decrease in liability because we paid by check, decrease in asset. Okay, means that we will credit bank, debit AB Berhad and XY Trading. Okay, debit AB Berhad and XY Trading. Okay, we look for AB Berhad and XY Trading. Okay, debit AB Berhad 250, debit XY Trading 400 ringgit, credit bank. Okay, AB Berhad and XY Trading. Okay, 250 and 400 ringgit. Receive a loan 500 ringgit from Amin. Receive a loan. So this one, loan is liability. Increase in liability. When we apply for loan, we will get money. So we will get cash. In this case, increase in liability, increase in asset. Increase in asset, debit cash, credit loan. Loan from Amin. Okay, debit cash, credit loan from Amin. Okay, debit cash, okay, suppose it should be cash, but normally when we applied for loan, normally bank will bank in our account, not giving in term of physical cash. That's why I debit bank, credit loan. Okay, debit bank, credit loan. If you put debit cash, credit loan, is also acceptable. It also acceptable, but normally loan will be bank in, not in form of physical cash. Okay, so debit bank, credit loan from Amin. So it depends. Okay, both are acceptable, but normally if it is say cash, normally we put it in cash, but it's okay, both are acceptable. Logically, if we applied for loan, normally it will be bank in, but if you put it as a cash, debit cash, also acceptable. Okay, 29 of November, receive check from Muthu and Sami for 70 ringgit and 600 ringgit. Okay, 600 ringgit respectively. Means that previously Muthu and Sami, we sold goods to Muthu and Sami on credit. Now they want to pay part of the amount owed to us. Okay, so debit, increase in asset, increase in bank because we receive checks, and decrease in asset as well because amount owed by Muthu and Sami will reduce. Okay, so debit bank 70 ringgit and 600 ringgit, credit Muthu and Sami. Okay, okay, and the last transaction will be the owner deposited further 1,000 ringgit into the bank, into the business bank account. Owner deposited. When we said this one is owner top up or invest more asset in the business. This one is increase in capital, increase in asset. In this case, the asset is bank. Okay, so credit capital, credit capital, debit, credit capital, debit, bank. Okay, credit capital, debit, bank. Okay, so we have finished record every single transaction from 1st November until 30th November. Now we want to balance off the accounts and prepare trial balance. Okay, to balance off the account, first step, as I mentioned in the lecture, we will total up. Okay, I will close off the delivery van account first. Okay, so only debit side 8,000 ringgit, no credit side, so the total will be 8,000 ringgit. To balance off, we put the date as at the end of the period, 30th November. We put balance carried down 8,000 ringgit. Okay, balance carried down as at the end of the period will become balance brought down for the next period. So here on 1st December it becomes balance brought down on the debit side. We call it, this one have a debit balance. This one will be transferred to the trial balance. Transferred to trial balance. Okay, same for capital. Only have a credit side, 6,000 ringgit on 1st November and 30th November, 1,000 ringgit. So the total is 7,000 ringgit. So we balance it off and we get a balance carried down as at 30th November, 7,000 ringgit on the debit side, and the amount will be brought forward or brought down to the next period on the credit side. So this one we say to have credit balance. Okay, we do the same for the cash account. Okay, cash account have 240 ringgit on the debit side and 45 ringgit on the credit side. So we balance off which part is higher, we put it at the bottom of the account. In this case, debit side is higher than credit side, so we put 240 ringgit on the debit side and we put 240 ringgit on the credit side. Then we minus the amount on the credit side, which on the 16th November, 45 ringgit wages, 240 minus 45, we get 195. So balance carried down as at 30th November is 195. This amount will be brought forward or brought down on the 1st December on the debit side as balance brought down 195. Okay, we do the same for loan for admin account. Okay, which we get credit balance as at 1st December, balance brought down 500 ringgit. Okay, for purchases account we do the same. We got a balance carried down of 1,100 ringgit on the credit side. And the balance brought down, or we have a debit balance of 1,100 ringgit. For bank account, the total debit is 8170. Okay, which is higher than the credit side. Then we find out the balance. Okay, 8170 minus 30 minus 200 minus 250 minus 400, we get a balance carried down of 7290 as at 30th November. This one is brought forward as a debit balance as at 1st December as debit balance of 7290. Okay, I do the same for the rental. We get a debit balance of 30 ringgit. Okay, and for the sales account, I got 1470. Okay, sundry expenses account, balance it off and find out the balance carried down and the balance brought down. We have a debit balance of 200 ringgit. Account receivable. Okay, for account receivable, there is no balance. There is no balance because debit and credit side has a same amount, so no balance. For account receivable SAMI, we have a balance carried down of 500 ringgit and it become a debit balance of 500 ringgit. And and for wages, balance carried down of 45 ringgit and we have a debit balance of 45 ringgit. For account payable AB Berhad, we have credit balance on the credit side have 390 ringgit, so it is higher from the than debit side, so we minus 250 and 20, we get a credit balance of 120 ringgit. Okay, we do for the same for the account payable XY trading. Okay, we get a credit balance of 275. Return outward, we have a credit balance of 55 ringgit. Okay, return inward, we have 60 ringgit debit balance. Tanjong Motor, we have 8,000 ringgit balance carried down. We have a credit balance of 8,000 ringgit. Okay, so that's it. For all balance brought down here, we will transfer to the trial balance. Okay, for example, delivery van, we have a debit balance of 8,000 ringgit. Okay, so I transferred to the trial balance on the debit side. Delivery van. Okay, for trial balance, we will start with the name of the business. In this case, there is no name. The name of the business is not given, so I leave it blank. The title is trial balance for the month ended 30th November 20x2, and we have 3 columns here: accounts, debit side and credit side. So the first one is delivery van, 8,000 ringgit. I just follow the accounts that I have opened earlier, and the amount balance brought down amount will be transferred to the trial balance. Okay, the second one will be capital. Capital 7,000 ringgit. Cash account 195, debit side. Capital credit side. Cash account debit side 195 and loan from Amin credit side 500 ringgit. Okay, so I transfer all the balance brought down figure here. Okay, capital 7,000 ringgit, cash account 195, loan from Amin 500 ringgit, and then I'll follow all the accounts balance brought down for each account will be transferred to the trial balance. Okay, look at the last one. Okay, return outwards on the credit side 55 ringgit, return outwards 55 ringgit on the credit side, and then I have return inward, debit side 60 ringgit, debit side 60 ringgit, and the last one is Tanjong Motor. We have a credit balance 8,000 ringgit, so I transferred to the credit side of Tanjong Motor 8,000 ringgit. Okay, when you have list out all the accounts which have balance, then you will get a trial balance amount of 17420 on the debit side and 17420 on the credit side. It should be balanced. Okay, noted that for account that has no balance, it is not transferred at all. Okay, for example, this one Mutu, the account is balanced, so no account transferred because it has no balance burned out. Okay, so with that we have finished with the ledger, close of the accounts, balance of the accounts, and transferred to the trial balance. Okay, so if you have any question, then you can post your question in the Google Classroom, or you can personally WhatsApp message to my number. Okay, with that we end the class by reciting Al-Inshirah Tasbih Kifarah. Bismillahirrahmanirrahim. Alam nashrah laka sadrak wa wada'na alladhi anqadha dhahrak wa rafa'na lak. Fa inna ma'al usri yusra. Fa idza faragta fansab ila rabbik. Okay, thank you.